Amit Agarwal, Group CFO of Raymond, joins us now. Amit bhai, good morning. Thank you for joining us.
Morning. Thank you for having me.
How was Diwali and Christmas? Any reasons for anybody, your shareholders, to get worried?
No. I think Diwali was great. I think people had really good time. There has been a sort of hiatus of almost 7, 8 months when people were not into so much of shopping in the first half and going up to August, September because of the that Malmas extra month. And I think as soon as that Malmas got over, people started to come back and saw a great shopping trend there. And I think what we also saw post Diwali, we were expecting a very, very strong comeback on the weddings. It had come back. It is decently better, but we were not getting the same level as we thought that it would be so strong. But now, once again, we have got a very strong wedding season. After the 14th, 15th of January, we start the wedding season till April. I think we are seeing from the dealer network very good opportunity to grow our business in this period.
Could you broadly tell us that for Raymond, what is happening in the urban market and what is happening in the semi-urban market? Because we are getting a sign that it's a K-shaped economy where urban is doing exceedingly well and semi-urban is yet to recover.
Yeah, absolutely. I think this is exactly what we are also seeing. I think tier 1 to 3 have seen people who have gone into the premium products. They continue to do more and more premium product. Premiumization is the way forward. What we are seeing as we speak today, same was seen in the Diwali time or over the wedding. I think the ticket purchases people have increased consistently. If I take over the last 3 years, people have been increasing by almost 50% the average ticket purchase. However, if you see to tier 5 and 6, I think there has been a little bit of a softness. First of all, people shifted the weddings from a summer to winter, and somehow even in the winter, the pickup in the tier 4 and 5, 6 cities has not been so great. So people are a little cautious as they continue to watch and beat the inflation on the main consumption side. I think then comes the discretionary, which is the spending for the marriages, for the textiles, apparels, and so on. I think therefore we have seen a bit slowness in the tier 5, 6 cities.
I also want to understand, your individual businesses. And let me talk about apparel first because, you've undertaken some very aggressive store expansion plans and the ramp up of ethnics business in particular that you've indicated. What's the kind of growth that you're envisaging for branded apparels specifically?
Yeah, so I think branded apparels has been a good spot. You saw even in the second quarter, which we reported the numbers, we have seen a good 18% growth. And as you talked about ethnics, I think we are very excited that we have crossed over 100 stores in ethnics all across the country. And I think the traction being the first proper season to see, I think the traction is very, very satisfactory. People like our product, people are coming, buying our product. So to that extent, we will really say it is just a beginning of this ethnics journey. It would take at least a year or two when it really matures itself. And we have, even for the other brands, like the Park Avenue, Color Plus, Raymond Ready to Wear, we are also expanding stores. And our broader theme is very clearly that we would be opening over the next 3 years more than 500 stores. So in this year, we have opened more than 75, 80 stores right now, and we expect any few more stores to open in this quarter. So I think very clearly 500 store addition is on the anvil. And actually, the advantage for us is that we have got the franchisees all across the country who tell us exactly the right property which is available for us and the right markets. Because if you see, cities are expanding. So actually, new areas are being developed, and we get the opportunity to participate within the first few months itself and open our stores. So that's also very, very helpful for us in order to place the right stores at the right location. And we continue to believe that apparel has a very, very strong potential to grow.
I want to definitely talk about real estate as well, specifically when it comes to Mumbai. And now that, Mumbai is getting this mega facelift, especially the suburbs, with the recent opening of the Mumbai Trans Harbour link as well. Several other, projects that we keep hearing about on a daily basis in the pipeline as well. Has there been a second order effect on pricing on some of your projects in particular? And are you eyeing any land parcels or JVs or JDAs, either side of the MHDL?
So actually, if you see very clearly in our Thane, we have been, as we have talked about several times, I think we have been consistent increase in the prices as we have been able to a very good sales velocity. Our products have been sold very well. First two projects, more than 85% sold. The address by GS product, even the third tower, which we launched in July of 2023, that is also sold more than 60%. So to that extent, if I look at it, overall, the project traction at Thane is very good. As far as JDAs are concerned, you're absolutely right. In the last quarter, what we have been able to sign is two more JDAs, one at Sion, one at Mahim, and one via Bandra, which we have. I think that is something which we plan to start in this quarter. And we are evaluating opportunities, as you rightly said, in the Navi Mumbai. And the infrastructure, which is very well seen in Mumbai, has clearly reflected, if you see the traction of people buying in Thane. And the proximity to Bombay, BKC is becoming very, very comfortable for people to drive. And that is good reflection. As far as land buying, you know it very well. That is the stated philosophy of the group, that we are not going to buy any land and we will do JDA route. And what we have signed the JDA, as we speak today, it's more than 5,000 crore worth of projects JDAs have been signed. So if you look at it, the total potential of Thane is 25,000 crores over several years, and 5,000 crores we have already signed. So we are in a decent spot in order to take this business really, really forward. And as you know that we are, the demerger is on, so hopefully by mid-May, we should be able to announce the demerger. SEBI approval is in place. Now the NCLT and the other process is on. So to that extent, you will have separate companies for real estate as well as for the lifestyle.
The potential for Thane, I just heard a number of 25,000 crore. Is that true?
Yes, absolutely.
25,100 crore could be the value of the development of your Thane property.
Yes, absolutely.
And so that land is with you.
Land is belonging to Raymond.
So exactly. I'm just trying to understand it, because 25,000 crore, even if it is done on a 10-year basis, right, 10 to 12-year basis, we are looking at 2,500 to 3,000 coming on an annual basis.
Absolutely correct. Because if you see today, what we are running the projects is worth 9,000 crores, which is a span of, let's say, 4 years, which we have talked about and started the real estate business. And that is only on the, what is called 40 acres, less than 40 acres. We still have 60 acres to go. So there's a huge potential on the Thane itself. But we continue our journey as well as beyond Thane. As we spoke earlier, that our target is that Thane should be in the range of 50 to 60% of the revenue mix over the next 3-4 years, and 40% to 45% should come out of Thane.
Land of Thane is in Raymond Limited, the listed company. It is not a promoter entity. It is not a holding company. It is, everything is in Raymond Limited, the listed stock.
Absolutely, it is in the Raymond Limited. And that is why if you see the demerger which is happening, is taking the lifestyle business from a Raymond Limited and moving it into the Raymond Raymond Consumer Care, which is the company where the lifestyle business will go. And Raymond Limited, who continues to hold the land, the development, will continue to be a listed entity as primarily business of real estate, and with a business of engineering, which is also, we have just acquired the Mining Precision in a fast growing sector.
Closing comments. Thane, you have the land bank. Other two joint developments you're doing. But minus Thane, if you have to grow, you'll have to ultimately acquire land or do JVs. And given that how right now there seems to be like a sugar rush in the real estate sector, there is more demand and less supply. How do you see the economics moving after 2 or 3 years? See, 2 or 3 years I can see visibility. 4 or 5 years, no problem. But real estate business has to have a visibility beyond 5, 7, 10 years. How will you grow beyond that?
Absolutely. I think it's a very good question. If you ask me, we see that the opportunity in Mumbai is trillions of dollars. If you see all across the city, there are many old buildings which have got the older and lower FSI. Today, with the recent changes, the increase in the FSI norms, everybody wants to have a better lifestyle, better community, and everything. So, therefore, we don't see ever a dearth of potential to get the land parcels in JDA form. As we speak today, I can tell you that we have reviewed over the last 24-25 months more than 300 proposals on the JDA. And we did our diligence, we go through in detail whether it makes the return metrics right or not. And then we selected these 3 projects. So very, very clear, there is enough and more sort of raw material is available for all of us, I think, and we can get the right projects. And I am not seeing whether it is a 2-3 year, it's a tens of years of project, because you can't build a city of this size over a 5-10 year period. Maybe it is a 50 to 70 year horizon.
Was not built in a day. Amit, good to have you on board. Thanks so much for highlighting the long-term growth plans for Raymond as well as the road ahead.